Hey everyone, welcome back to Corporate Decoder, where we decode the financial jargon to find the real stories. Today we're diving into something spicy, a filing that might just give us a peek behind the curtain of dividend decisions for a major real estate company. So buckle up because this is going to be a fun ride before we dive in. If you are new here and love getting the inside scoop on corporate filings without the headache, hit that subscribe button, and hey, we've built a fantastic community over on Discord where we break down these reports and more. The link is in the description below, so pop over and join the conversation. Alright, let's talk about Regency Centers Corporation and Regency Centers LP. This report is coming out on the 28th of October, 2025, and it gives us a snapshot of what has been happening with the company. The really interesting stuff for today is all about their financial health and decisions about pleasing their shareholders. First up, Regency has served up its earnings for the 3 and 9 months ending the 30th of September 2025. This is where you get the raw numbers on how much money they've made and spent. Think of it like a report card for the business. And alongside those earnings, they've also released their Q3 2025 earnings presentation. This is usually where the company tries to put a positive spin on things, so we'll be looking past the fancy slides to see what the actual numbers tell us. But here is where it gets really juicy. On the 27th of October 2025, the company's board of directors held a meeting and made some key decisions about paying out money to their investors. This is what people really care about. They declared a dividend for their common stock. That is the regular stock that most people own. It is set at $0.755 per S-share, and shareholders of record on the 15th of December will get paid on the 6th of January of next year. Now, they also declared dividends for their preferred stocks. There is the Series A. That is the 6.250% cumulative redeemable preferred stock. That dividend is going to be $0.390625 per S-share, payable on the 30th of January to shareholders who owned it by the 16th of January. And then there is the Series B, the 5.875% cumulative redeemable preferred stock. This dividend is $0.367200 per S-share. Also payable the 30th of January to shareholders of record on the 16th of January. What this tells us is that Regency is in a position to keep returning value to its shareholders, both common and preferred. Companies generally only pay out dividends when they feel confident about their ongoing financial stability and future earnings. Now, to really understand what is driving these dividend decisions, we need to look at the underlying financial performance. The earnings release, Exhibit 99.1, is crucial for this. This is where they'll detail their revenue growth, their operating expenses, and their net income. We're looking to see if the company's core business is thriving, which would justify these dividend payouts. And then there is Exhibit 99.2 and 99.3. These are supplemental pieces of information that Regency has put on its website. These often contain more detailed financial breakdowns, so we'll be scrutinizing those for any hidden gems or warning signs. Think of them as the footnotes to the main story. But sometimes those footnotes contain the most important plot twists. This filing also includes what is called an interactive data file. This is essentially the same information but formatted in a way that computers can read and analyze easily. It helps with transparency and allows for quicker data extraction, which is exactly what we're doing here. Looking at these filings, Regency Centers is a real estate investment trust, or REIT. They focus on owning and operating shopping centers. This means their financial health is heavily tied to the retail market, consumer spending, and the overall economic climate. When people are spending money, shopping centers do well. When they aren't, these types of companies can struggle. The fact that they are declaring dividends, especially on their preferred stock, suggests they are managing their properties effectively and have a stable income stream from their tenants. Paying out dividends consistently and on time is a sign of a mature and financially sound company. Now, let's put on our Warren Buffett hat and really dig into what this all means. When a company like Regency declares dividends, it is a signal to the market for common stockholders. It is a direct reward for their investment. For preferred stockholders, who typically get a fixed dividend, it is a confirmation that the company can meet its obligations on those shares. The specific dividend amounts, 0.755 for common, and the precise figures for Series A and Series B preferred, show disciplined financial management. They are returning value, but they are also likely retaining enough earnings to reinvest in their properties, or weather any potential economic downturns. The timing of these dividend declarations, just before the reporting of the earnings for the quarter ending the 30th of September, is interesting. It suggests these decisions were made with an understanding of the company's performance in that period. It is not a surprise announcement, it is a well-considered move. However, we always have to look for risks. The retail sector can be volatile. If there is a significant shift to online shopping, or if economic conditions worsen, rental income could decrease. This could put pressure on Regency's ability to maintain these dividend payments in the future. Also, the specific terms of the preferred stock dividends, like redemption dates, are important. If the company were to redeem these preferred shares, it would generally do so when it is financially advantageous, implying they have the capital to do so. But it also signals a potential shift in their capital structure. In conclusion, Regency Centers Corporation's latest filing shows a company that is actively managing its shareholder returns through consistent dividend declarations. This demonstrates financial stability and confidence in their ongoing operations within the shopping center real estate market, while the retail environment always presents some inherent risks. The current dividend payouts suggest the company is performing well. We will be watching closely to see if the supplemental information provides more clarity on the sources of their revenue and their strategies for future growth. Alright, that is our breakdown of Regency Center's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. And don't forget to check out the link in the description to join our Discord community where we continue these conversations. Thanks for watching, and we'll see you in the next video.